Good evening and welcome back to Be Rich. Today I wanted to talk about Uncle Warren again. So details have emerged of how he clinched this $11.6 billion deal in which he is bought Algamy. Algamy, as I told you, is an insurer of property and casualty insurance. And it's got the surplus money and it whatever the surplus cash it has invested in other industry just like what Buffett has done in Berkshire Hathaway. It has a mini fabrication unit. It has a toy manufacturing figurines and several other companies. The company struggled in the last 2 years due to losses in insurance and has not had any profitable underwriting insurance profit this year. So, Buffett has been interested in buying this company because its CEO, Mr. Johnson, used to work for him as the head of general reinsurance for some time. So, Buffett met the CEO of Algamy for a dinner in New York when they had steak, in which he said he would pay $850 for the company. And he said, there is no financial advisors, and I am not going to pay any money for any advisor. If Algamy wanted to have an advisor, he said they had to pay for it. So, this led to a point when the financial advisors for Algamy happened to be Goldman Sachs. They charged about $2 a share for their fees, and that has led to this quirky amount of $848 approximately for each share of Algamy. And it's an all cash deal where he would buy this company for $11.6 billion. The chairman of this company, Algamy, decided that he could do something better and started to negotiate with Warren Buffett in Omaha. In these meetings, he pushed for more valuation, which Buffett flatly declined and said it had to be $850 per share or he would just get up and walk away. And there is no possibility of him increasing his offer. There was also talk of Buffett sharing the financial advisory fee, which again Mr. Buffett flatly declined. And he said in his acquisitions, he needs no advisors, nor does he use one. So it remained as it is. The final bit of the negotiation was that the chairman of the board of Algamy wanted a portion of the money of $850 to be given as Berkshire Hathaway shares. But Warren Buffett has politely declined and said people who wanted to own Berkshire Hathaway could exchange their shares. The cash that was paid to them, they could go to the stock exchange and buy Berkshire Hathaway the next day. And therefore, there is no question of issuing more stocks to buy Algamy. Once this was all done, the financial advisors to Algamy, that is Goldman Sachs, decided they wanted a go see period. In this period, for the next 30 days from the day the deal was first inked, the financial advisors of the company, Algamy, would go and score around the market and find whether there were any buyers who were willing to pay more than what Buffett was willing to pay. This period ends on April 14th night in American Standard Time. As of today, as I am speaking to you, on April 11th, there seems to be no big buyer who is interested in paying more for Algamy. Thus, it looks like that Buffett will be able to close this deal in the coming week by paying $11.6 billion cash. At the beginning of last year, Buffett had a cash balance of $146 billion, which was largely lying in cash or American short term securities, and he was looking for options to buy some big deals. And this is the biggest deal he has done for some time. So, why does not he give Berkshire Hathaway shares? In some time in the distant past, he did buy a shoe company and gave Berkshire Hathaway shares to the owner instead of the shoe company. Finally, after running that shoe company for some time, he found that he could not run the company and the company had to be shut down. And Berkshire Hathaway had to take a loss for buying this company. However, the owners of that company who got shares in exchange of Berkshire Hathaway still hold on to the shares, and the shares which was in hundreds of dollars at that time is now worth several $100,000. So the owners of the shoe company who sold to Berkshire Hathaway and exchanged it for Berkshire Hathaway shares have made a humongous amount of profits of the company, and the company itself did not make much profits. That taught Warren Buffett a lesson that he would not use his share as currency, because he always knew that the Berkshire Hathaway shares as currency were always more valuable than US dollars, because the US Federal Reserve continues to print US dollars like there is no tomorrow, whereas the number of shares of Berkshire Hathaway is going to come down but not go up. Why do I say that the number of shares of Berkshire Hathaway comes down, does not go up? Because every year, when he is not able to deploy the amount of money that he has, Warren Buffett announces a buyback and buys back shares. And those shareholders who do not want to hold on to these shares submit and tender these shares in the buyback offer and exit the company, and the shares are therefore extinguished by the Berkshire Hathaway board. So the number of shares come down even if the profits remain same, EPS goes up. This is a way of rewarding shareholders, knowing that a currency which where the availability is going to come down over a period of time is always more valuable than a currency that is printed at will. Therefore, Warren decided after he lost money in the shoe company that he would never in his life issue shares in lieu of buying a company when he has plenty of float lying around. The secret of Warren's success is the fact that he is able to collect so much float from his various insurance operations, which always gives him liquidity to buy stocks when at will. This is the story of how Warren Buffett bought Alchemy for cash. Thank you for watching. Be Rich. If you like the video, kindly consider subscribing to our channel and turning on the bell notification. If you do not turn on the bell notification, you will not be notified every time a video is put out. If you do like this content, kindly consider sharing with your friends and relatives. Once again, I thank you for supporting Be Rich. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.